Good afternoon, this is Clark Neighbors with BIS Commodities with the market update ending the week of January 19, 2018. Four-day market week. March corn ended up about a nickel. Keep in mind that's about 7 cents over the low of the report a week ago today. March beans up 13 on the week, but 30 cents higher. Based off the low coming out of the report last Friday. Wheat up 3 cents for the week. For what it's worth, cattle market up $4.50 this week. And another volatile cattle market with some thoughts of a better cash trade going forward and good demand, and the hog market up about 50 cents. Commitment to traders report this afternoon continuing to show funds short all three grain commodities: corn, wheat, and beans. Corn short position by the funds is 226,000. Wheat's about 140, and beans just a little over 100,000 contracts. Funds are long on cattle and hogs, but some of that length has been pared away. Interestingly enough, too, on a side note, looking at the macros, stock market took out 26,000 this week. The Dow did. A year ago at this time it took out 20,000, so you can see the stock market's roughly 30% higher today than a year ago at this time, and I believe so far for the month of January in 2018 the stock market's already up 5% year to date, and that's about a 50% uptick in the S&P in the last 2 years. So the stock market continues to be very impressive, solid economic numbers, fundamentals going all the way around, as the stock markets around the world seem to be performing fairly well right now. Having said all that, the dollar index continues to be kind of weak in comparison to where it's been over the last 2-3 years. At some point, is that going to have some positive influence on the commodities? I think it depends on the commodity. Energies, yes, as production continues to increase here in the U.S., but world demand continues to be pretty good. So we've seen some structural issues as far as energies going forward. We've seen cotton take a big uptick here in the commodity trade in the last year or so, basically off of Chinese demand for cotton. Some of the precious metals have been a little higher, and industrial metals, specifically copper, have had a pretty big move over the last year or so. As far as the grain markets are concerned, we continue to see in the cash markets on corn an inverted cash market, with prices today worth more than they are tomorrow. Here in Cedar Rapids, for example, I think the cash bid for corn today is higher than it is going all the way out to April or May. It's basically telling the producer, sell it today, don't hold it in the bin any longer. So producers need to continue to push into that premium market the best they can. Logistics, weather, and just the raw ability to move is obviously going to be an issue. When you look at 12.5 billion bushels of corn stocks as of DS1, there's a lot to whittle through. So fundamentally, both in the corn and beans continue to be soft. Obviously watch basis going forward, but at the end of March we'll get a planting update, we get a stocks update, but between now and then there's not a lot of news to talk about unless we see some issues out of South America as far as some late growing season weather concerns. There is a pocket in Argentina that's got some people's eyes, but keep in mind that's just a pocket of Argentina. Brazil's in very good shape. So movement did pick up this week. We did have that uptick in corn, as I mentioned earlier. That did seem to spur on some producer movement, and as we get closer to planting season, needs for more cash and just logistically trying to move some inventory, that could have some negative influence on the basis depending on how much uptick we see. If you have any questions on any of these commodities, feel free to give us a call at BIS Commodities. Phone number is 800-373-2525, or catch us on the web at biscommodities.com. Everyone have a very nice weekend.